All right, welcome back, everyone. So, in regards to my last video, when I seen that we're threatening a trend reversal, and it definitely looks like this candle is going to fulfill that topic, a standard question comes up is, okay, well, what's the signal that we're going to go on the next run? Like, where do we need to close? And it's a very valid question because that ultimately matters, and it kind of gets coupled with price action and the strength of the overall movement, because you can have tests and then obviously those tests can be rejected. So where do we need to start closing to signal the next run here? So we're already closing above the 16, which is kind of like the micro zone where we need to close, which would be the bowl here back to around April 2022. But in the broader scope, which we've done this several times, we've got some rejections here. Obviously, we can close a little higher, closer to 17, which is kind of where we're kind of getting that that pushback from. Because if you look over here, you'll see there were several tests here back in April of 2022. So right around a year ago, right? Right around 2 years ago, excuse me. This is where we were getting rejected from. We were trying to retest, and we were literally bumping our heads on the 200-day moving average. And so this is kind of like a coming full circle, really, and letting you know that we're breaking highs that we have not seen in quite some time. So, and this is kind of goes into my estimates for around the 20 range, because if we looked at this here, where is the peak of this rejection? And that is going to be here around the 18-cent mark. And that'll eliminate any of the 16s, obviously, because 18 is higher than 16. So if you start closing higher than several of those previous rejections, then of course that's going to give you conviction in the current movement. And I could zoom in because this is not just one or two rejections; it's actually like 4 or 5. But you guys get the point. If we start closing at around 18 cent or higher, especially with conviction, that's going to open up that next leg, that next run. That's kind of where the price action needs to be. So it's not even a surprise that we are consolidating at this level, which is absolutely fine. I have no problems, as you guys know who've been watching my channel. I have no problem with the stairway. I believe it's better. It's healthier for the long trend of the movement. And I have no problem building out floors and support areas instead of just these candles here. But the thing is, after this range, we do go into another, shall I say, gap territory, right? And that's going to put us around that mid 20 range. Is what I was saying. And if we had some overshoot, possibly around 25, we'll see. Obviously, a couple things that, as far as like traders, how they're going to respond, shorts, all that kind of good stuff when they get coupled in there. But after 18, we're looking at somewhere between 22 and 25. And again, I'm not trying to base this off of the past. It just kind of gives you some inkling of just what to expect, because we have been setting a new trend here. And like I said, this new trend is much more aggressive than what we've seen in the past. So kind of like with what 12 cent was supposed to be. 12 cent was supposed to give us some trouble, and we're supposed to see some back and forth, little ping pong tennis action. Did not happen. Completely blew through 12 cent, and it could do this again here. I'm just telling you what the charts say. So we should have a slowdown somewhere between 22 and 25, and we may absolutely not. I can't tell you this price action that we've seen here has absolutely shocked everyone. Last run, again, 9 out of 10 days green. Historic run. I didn't go back prior to 2021, but I can tell you with certainty that this has not happened since the initial bull run. So this is the first time, and this is the strongest leg up that we've had in the coin. So since 2021. So I'm sure when it was less than a penny, that's probably debatable. We've probably seen I know we've seen much more significant gains, but it's easy to do when you're less than a penny. That's why you kind of get like stuff like Shiba. But overall, that's kind of where we are now. We are doing perfect as far as building out this floor area. And the beautiful thing about this is if we have, let's just say, we come up here to around 25 cent, right? And this is kind of where we're, the next break pump is, where we have a series of green candles. We're at 25 cent and we're saying, oh my God, where's the retest? This is a perfect example here. I can't say this enough, because sometimes people get afraid and they start selling, and again, do what you want. It's your money. But this is where you can expect to gain liquidity from. Excuse me. So this zone here is going to be absolutely perfect. I love this. And the closer you don't want necessarily want your zones to kind of overlap, but you just want them to be there and to be present so that you're not thinking about every time you need liquidity, you're doing a 50%, 80% reversal. And you're like, okay, now we've sold off 80%. Now we got to gain back 80% just to break even to where we were before we can even think about the next leg up. I promise you don't want that in a coin. This is perfect here. Even if we came up here and we went to 25 cent, let's say we had some overshoot to maybe around the 27, 28 range, just a little hopium there. That's like just to assume that maybe it's going to do something like it did with around 12 cent, that little overshoot there. And then we start building out the floor again. That's absolutely perfect. That is absolutely perfect. And then that definitely puts us within strike range for the 30 cent. And that way, if we get some rejections around 32, 34, looking at some previous trends, we have a support level right there where markets have agreed that they're willing to exchange. That is perfect. And honestly, you want another support level in the 20s. And because like as I mentioned before, the 20s, let's just go back here. If it gets really choppy over here in the 20s, right? The 20s was a battleground when we were coming down off of that initial high. This is October 2021. This was a absolute war zone. So when you are looking to go and ascend into the 30s range, you're going to want another support level in the 20s. You don't want that gap down from 28 to 18 or to 16. That's a 100% drop. So you're going to want to build out another floor here. I know some people you have been in the coins for have been in the coin for a few years, and they're lacking patience, saying, "Hey, we want bigger gap ups and stuff." But no, you do not. I can assure you that you want some support here in the 20s, so that if there is a rejection or when there is a sell off or a consolidation in the 30 range, you're not getting the coin valuation cut in half just to grab liquidity. So hopefully we can build that level somewhere in the mid 20s, maybe even the upper 20s. If we gap through the lower 20s into the higher mid 20s, that's absolutely fine. But we definitely need to build another support area somewhere in the 20s just for the strength of this movement, and then kind of rinse and repeat for the 30s. You want, because I think where we got into trouble last time is, especially with the speed, was the volume that was coming in. It was so great and so massive the initial run. You would have to kind of look at here we go. I just wanted to zoom in here. These are some of the candles that we were looking at here. This here is March 2021 from 6 cent. This is from 7 cent. This is one candle on the day to 32 cent. And we had a sell off here. This is a weekly, excuse me. You went from this is one candle from 7 cent to 32 cent in a week, right? So we're talking about a 5x in a week. So that type of momentum is going to create these gaps that if the momentum isn't consistently on that level, which it can't be in anything forever, those gaps typically can tend to get filled. And when the green candle is that massive, you have no idea where the market is going to say, okay, I'm willing to enter this. I think this is a good deal. You have no idea. It's only an assumption. And that's how you get those massive selloffs. And so I think for this time around, we're doing the right thing, even if it's because there's so many coins in the market that we are, just competing a lot more heavily just because we are in, what's going on here? Just because we're in the, I'll say we're in the, it's not the early phase. Well, I guess it's kind of the very early phase, the beginning phases of the current run. So we're not into like max FOMO just yet. So it's kind of giving us an opportunity here to kind of get our footing before max FOMO comes in and we're having a lot of volume, because you can't control when volume comes in or when panic sets in. So this is giving us an opportunity to kind of get our ducks in a row prior to that. So overall, that is the zones that we need to hit. I hope that makes sense. Let me know if it doesn't. I'll review it in the comment section as best as I can. But that is the place where we need to close to signal the next run. If you found value in this video, make sure you like, subscribe, share it with a friend, and I will see you guys in the next update.